Good morning students. We will come with the next module of final accounts, that is preparation of profit and loss account. So this is the second statement we are preparing, that is the profit and loss account. First is the trading account, second is the profit and loss account, and third is the balance sheet. So when you are talking about profit and loss account, this is a continuation of trading account. We have seen that gross profit or gross loss from trading account is transferred to profit and loss account. So that is the first step you have to remember. Next thing you have to remember, indirect expenses of current year are debited to profit and loss account. So here you have to remember that what all items will come in the profit and loss account. I am explaining one by one. So indirect expenses. Now you have to remember, direct expenses we are taking into trading account. Direct expenses we are debiting to trading account. Direct incomes we are crediting to trading account. When it's coming to indirect expense, then we are taking it to profit and loss account. Now what is the distinction between direct and indirect expenses? Factory expenses is a direct expense because it's directly involved in the manufacturing process. Whereas if you carriage outwards, sales, you are incurring certain expenses to bring it to the, send it to the item to the customer. That is an indirect expense. That is how you distinguish. If it's direct, it will go to trading account. If it's indirect, it will go to profit and loss account. Now, similarly, indirect incomes of current year are credited. Indirect incomes meaning if you are getting an income not from your main activity of business. See, for example, a business organization doing insurance business, they have building to let out, so they are getting rental income. That will be is not the main source of activity for the business. Their main activity is insurance, so they were getting any bank interest, commission, rent, anything like that. It will be the indirect income that we will take it to profit and loss account. Now how you calculate the profit? The difference between debit side and credit side, that will be the net profit or the net loss. Next is, you have to remember difference between debit side and credit side. The net profit or net loss I have explained. Then net profit is added to capital. If it's net loss, it's subtracted from capital. Then what are the items debited to profit and loss account? This distinction is important because which all items to be taken to trading account, which all items to be taken to profit and loss account. This will help you to distinguish that. Salary, if it's wages, you know that it will go to trading account. Salary meaning it's an indirect expenditure. Wages and salaries, see, this you have to remember. If an item is coming as wages and salaries, it will come only in profit and loss account. I told you, if an item is coming as wages, it will go to trading account. Salary, it will come to profit and loss account. But if the item is wages and salaries, please remember that it's an item of profit and loss account. Rent and taxes. Rent is if you're paying rent for the building. Taxes is what you pay as building tax to the government, or in taxes what you're paying for the building. Then insurance. Similarly, you have to take insurance for the safe keeping of the building, so that insurance will be there. Fire insurance, theft insurance, all that will be an item for the profit and loss account. Next is office lighting. Lighting is a main expenditure. Then printing and stationery, printing pamphlets, printing advertisements, all that, printing and stationery. So that item, printing bill book, all this will come. Stationery means what you buy for the day-to-day activities. Maybe you need you need books, you need computer cartridge, you need printer cartridge. So this different things you have to purchase for that. Office heating. Office heating, if in the winter if you are using that heating and lighting, so that is office heating is another expenditure. Repairs and renewals for maintaining the fixed assets, that is another expenditure. Continuing with that, carriage or freight outwards or carriage outwards. This is an important thing. Carriage inwards is a trading item because you are bringing raw material to the manufacturing unit. But if you are sending the finished product and you are sending it to the customer, that you will incur certain expenses. That is carriage outwards. It is indirect. It is not directly related to the manufacturing process. So it will come to profit and loss account. Bad debts. It's not necessary that you are able to recollect all that whatever is due from others. So sometimes some bad debts will incur. That money you have to collect it from the customers. They've not paid. So that is the bad debts. Commission paid. Sometimes you have to pay commission to sell your item. See, for example, if it's a book dealer, 30% commission you have to pay to the bookstore to sell that item. So it will vary from different organization to organization. So commission paid for the business, that is the profit and loss item. Advertising expenses, it's a profit and loss account item, because without advertising nobody will be able to sell the items. Next is free samples distributed, that is a profit and loss account item. When you are introducing a new item, you have to distribute the samples. Without that it's not possible. Similarly, trade expenses, which are the usual items. Sometimes you have to give the refreshment, sometimes you have to give some lunch, sometimes you have to entertain the customers. Similarly, trade expenses will be there. Discount allowed in selling the items. So that is, you have to remember that this is a profit and loss account item. Interest paid, that means sometimes you are taking a loan, you are paying some interest, that is the profit and loss account item. Traveling expenses for the marketing people, you have to pay the traveling expenses, then only they will be able to go and spend that and sell that item at different places. So that traveling expenses is an indirect item that will be debited to profit and loss account. Audit fees, you have to pay audit fees to the chartered accountant to finalize the profit and loss account and balance sheet, and to certify that the accounts are correct. That's important for filing the tax returns. So audit fees is an item for profit and loss account. Legal expenses, if there is some dispute, you have to appoint an advocate and their legal expenses will be an item for profit and loss account. Bank charges, bank will charge for checkbook, bank will charge interest, SMS message they will have. So different charges they will charge. So that is the bank charge is a profit and loss item. Then loss by theft, if it's some theft happened in the organization, so that is a profit and loss account item. Now items to be credited to profit and loss account, you have to remember, I told you, if they are doing the main activity. See, if it's a banking organization, banking is their main activity, they will be doing so many other things. They are selling insurance projects, they will be doing some commission, they will be doing some stock market investments, for that they will get the commission. So the commission received. Any activity which is not the main activity of the business organization, so that will be the items credited to profit and loss account. Sometimes commission received, dividend received for their investments, rent received for the building which they have given it on rent, interest received from bank, discount received from other customers or other business organizations. These are the items credited to profit and loss account. So this is what I want to explain in this module. Thank you.